Welcome once again to Ali Clive Accounting. This time we are moving on to the topics that you are going to be dealing with in term 2. Okay, the questions that come from paper 2, accounting paper 2, grade 12. Okay, the first topic that we are going to be looking at is inventory valuation. Okay, so I picked up this question from the Western Cape Accounting Revision booklet for term 2. Okay, so we're going to start from activity 1, inventory valuation. The question has got 35 marks. I'll do it in stages. All right, so let's look at the information that is given together. Alpha Electronics is a business that sells televisions. The business is owned by John Fortune. They make use of the weighted average method for stock valuation and use the periodic inventory system. The financial year ended on 28 February 2019. The markup is 25% on cost price. Okay, what are the requirements? 1.1, calculate the following on 28 February 2019. The first requirement is 1.1.1 on 1.1.1 is to calculate the value of the closing stock. How do we calculate the closing stock? Using the weighted average method. Now I want you to follow me as I do the calculation. Calculation of the closing stock using the weighted average method. Okay. All right, let's start our calculations. Okay, I can start by giving you maybe a formula that you can always use. So when you are using the weighted average method, of course, we need to look at the total value of units available, total value of units available, okay, divided by, of course, the total number of units that are available, divided by the number of units available, the number of units available. Okay, what is it that we want to calculate? The closing stock. So we multiply by the number of units on hand. Okay, so this is the formula that we are going to use. So the first thing that we are going to do is to calculate the total value of units available, is it? So in other words, we are going to be looking at the opening stock, we look at the purchases, we look also at if there were at returns, if there were any returns, if there were carriages, we also deal with them. Remember, the carriages, they increase the value of the stock that is available and all those other things. So let's go to the information that we are given in the table. Okay, we'll start from information A. Okay, this is information A, stock of television sets. Okay, we are given the opening stock, we are given the closing stock, which we do not have the value. Okay, but for now we need the the total value of the units available. Okay, so the first value that we are going to record is the one for the opening stock, is it? Which is 195,424. So I'll indicate here, just for reference sake, opening stock 424 plus the purchases. Okay, let's look at the purchases that are given in table in the information that is given on B. Okay, if we look at the purchase, the total purchase is how many units were purchased? 788 units in total, and this is the amount 4,034,660. Okay, 4,034,660. This is our purchases. What else do we have from the table B? Okay, if we look at table B, we are also given returns. How do we deal with returns? The returns are going to decrease the value of the units that are available. So we are going to say minus the returns. Okay, how many items were returned? There were 7 units that were returned on or from the January 2019. January 2019, 7 units were returned. So what was the price of each unit? 5,512 times 7. So if you say 5,512 times 7, we are going to get something. Let me check with my calculator. We are going to get something like 38,584. 38,584. Okay, how did I get this amount? I said 5,512 okay, multiply by 7. That is the amount for the returns, okay? So this will give us the total value of units available, okay? And then we divide by the number of units where the opening stock is 49, and then we add the purchase is 788 units, and then we minus the 7 units that were returned, okay? Fine. So let's simplify everything and find out exactly. Remember, in the end, we're going to multiply how many units on hand. We go back to information A again on 28th February 2019, 220 units times 220. Whatever amount that we're going to get, we are going to divide by 220. Let's solve what is on top and then we divide by the number of units. So 195,424 plus 4,034,660 minus 38,584. It will give us something like 4,191,500. 4,191,500 divided by how many units? Of course, if we say 49 plus 788 minus 7, we are going to remain with 830. Okay. Remember, we are going to say times 220. Okay. Whatever that we get. So when we divide 830 into 4,191,500, we are going to remain with something like 5,050, okay, times the 220 units that were on hand, okay. This is our weighted average price, is it? Our weighted average value, 5,050 per unit times the 220 units that are on hand. It is going to give us a closing stock of how much? It is going to be 1,111,000. So this is the value of our closing stock using the weighted average method. So the formula is straightforward. You calculate the total value of units that are available. You divide by the number of units available times the number of units on hand. Okay. Opening stock with purchases and with returns, and you do the same again for the number of units, and then after that you divide to find the average price, which is 5,050. When you get your average price, you multiply by the number of units that are on hand, which will give you 1,111,000. This is our closing stock using the weighted average method. Thank you.